In the past roughly 13 months, Peloton stock has lost roughly 90% of its value. Should Peloton be preparing for a class action lawsuit for incorrectly labeling themselves a platform? Let's dig on in. Peloton stock way down. Peloton shares are soaring on potential takeover talks. That's relative because they were way down. Now they're kind of up, but still relatively down. You've got an activist investor here that came out in the news suggesting that the Peloton CEO get fired and to bring in a new leader. The activist investor, Blackwell's Capital, got their way. Peloton CEO has stepped down. Almost 3,000 people fired. The company is retrenching, not making bikes anymore. Really lost their way. I mean, here's the thing, right? This doesn't come out of the blue. Like if you're the CEO, if you're John Foley, you see this. I mean, you see this in the data. This really was just poor management, not wanting to make the tough decisions and get out in front of this, right? Why they're needing to take such kind of what seems as drastic action after the fact just goes to show you it's just poor leadership. Derivative impact of Peloton tanking. Firm stock was down about 20% because at its peak, Peloton accounted for roughly 30% of a firm's revenue. So 6 months ago, August of 2021, Peloton stock at, about $113 to now has closed at about $36. Hit a low of $24, right? This is just in 6 months, folks. So, had basically almost a $40 billion market cap, now at about $12 billion market cap. Why has this happened? Basically, they've run out of people to sell bikes to. They've run out of new revenue streams that they can sell to their existing customers, or, the kind of upselling existing customers has certainly not replaced the lack of revenue from selling bikes to new customers. Company is basically on the verge of imploding. Peloton definitely benefited from a massive COVID boost of people not being able to go to gyms, looking for, ways to stay healthy while sheltering in place and just staying in their homes. And Peloton, a huge beneficiary of that COVID bump. Starting in September of 2019 at about $25 a share, you can see them just go through the roof. April 2020, they start to go up. Then they hit a peak in December of 2020 of $162 a share. And then it's kind of been a downhill slope from there. When you read through the Peloton S1, they mention the word platform 40 times. Peloton is the largest interactive fitness platform. First of its kind subscription platform. We have built a vertically integrated platform, not a platform business. I love the word. Look at this. Growing and scaled platform with network effects. Should Peloton have a class action lawsuit filed against it? Maybe. There's a clause in the S1 that says growing and scaled platform with network effects. I mean, this is actually deceptive, right? What network effects are they claiming to have? Obviously, just selling a bike is not a platform business. Just like Apple selling an iPhone, not a platform business. Where does the iPhone and Apple's network effect come from? It's from their community of developers. Peloton could potentially build a community of trainers, but all their trainers on the kind of training portal are hired Peloton trainers. They're on balance sheet. They're paid by Peloton. These aren't some network of like third-party trainers that are building an audience within the Peloton kind of customer base. They talk about network effect referring to their members. It just doesn't make any sense. Like, what are they trying to be, a social network connecting members? Oh, yeah, these members, they like to compete against each other. So we've got like a social network stickiness. That's insane. And they're smarter than that. They know that's insane. Should someone acquire Peloton? I don't know. I think it's probably... I don't know. I think it's probably still overvalued. I mean, they're up 50% from where they IPO'd at in the fall of 2019. It's a $12 billion market cap company doing, a couple $1 billion in revenue. You got a 6x revenue multiple. this is a linear business. I mean, they sell bikes. Their activist investor, Blackwells, thinks, wow, look at all these potential acquirers. SoftBank. I mean, you just have to, it's obligatory. Just throw SoftBank on any acquiring slide. Why would a technology company buy Peloton? Lulu Lemon? But even that's a stretch. I mean, this thing, I think it's too expensive. And if it's a 12 billion market cap company today, that 12 billion does factor in some of the jump on the news that there could be a strategic acquirer, but still they're going to need a little bit of a premium over that. At over 6x revenue, I mean, why this company, it's insane. It's so expensive. Why would any of these media companies want to buy this? Berkshire Hathaway, Adidas. Like, I think best case scenario is one of these apparel companies wanting to get into the connected fitness, connected, home arena. But that's an expensive play. They're losing hundreds of millions of dollars. They lost $400 million over $400 million in the last quarter, $375 million in the quarter before that, $313 million in the quarter before that. I mean, in Q1 of 2021, where they have all-time record numbers, $1.26 billion in revenue, up 140% over the prior Q1 of 2020. They basically break even. Are you kidding me? I mean, they need to retrench. They needed to retrench a year ago. I mean, how do you not make any money? 140% year over year revenue increase, all-time highs, 1.26 billion in revenue, and you don't make any money. It's insane. You run a business to make money. I know a lot of people conveniently just kind of ignore that fact these days. The COVID bump, the COVID veil has popped, just like on Zoom. Zoom had a huge COVID bump. Zoom has also fallen. Zoom also proclaims to be a platform. It's not a platform. So you're basically seeing the demise of these COVID darling babies that claim they're a platform because it's easy to claim you're a platform when your revenues are going through the roof and you just kind of feed the hype cycle. But it's disingenuous and it's actually misleading investors. And you're not a platform business. You're not a platform business. Hi, I'm Alex. Thanks for watching the show. Make sure to hit that subscribe button. But even better, make sure to follow us on Odyssey, follow us on Rumble, and text us 203-646-5159. Text the word Monopoly. You'll be subscribed. You'll get updates about when we're going live, our latest videos, and we'll send you even a little goodie bag. And in the event that we all get banned from big tech, we'll still be connected.